So we can't say that we are going to live for another 10 years, 20 years, right? Especially, right, it doesn't have to be old to die, okay? And with all the conditions now, okay, so why is it so important for you to leave behind a will? All right, number one, the importance of the will is, number one, is the appointment of the administrator. In other words, the appointment of the executor. Because remember that the executor or the administrator is not the person who actually will get the wealth, all right, or the estate. He is the name administer, all right, to execute. So if anything happen, then you have a person which you have actually appointed under the law to administer your wealth, all right. And remember that you are leaving behind your spouse and your children, right? So because you may have a most condition whereby a husband passed away, wife is not working, all right, and then have so many children left behind. So we need to get someone to manage everything, yeah. So but the problem is that because sometimes we don't believe other people, okay, we say that I'm not sure whether the other person will be able to manage my wealth, all right. But remember that once you are down under the under the earth 6 feet under, all right, so there's no other person, of course there's no other person better than you, but you have to do it, right? The number one is, of course, the appointment of the administrator. Number two, then only come the allocation of your wealth, the distribution of your wealth. So if you have a will, then you can actually put in the will how you want your wealth to be distributed, okay? Of course, there are different laws for Muslim and non-Muslims. All right, for non-Muslims, if you don't want to follow remember the act that we looked into last class, Distribution Act, right? So if you do not want to follow that act, then you can actually put everything under the will specifically, how you want the wealth to be distributed among your beneficiaries. Not only that, all right, you can also put how much you want to contribute to any other NGOs, for example, yeah, you want to contribute. Because remember that the money that you have during your, for example, in my case, all right, now I have, what I have now, all right, if I die, I may have more wealth. Yeah, maybe at that time, I have my insurance compensation, I have my EPF contribution, and most likely is the insurance, yeah. So, of course, you say that, okay, I don't want to die yet, all right, but you have to prepare. You have to prepare for all these things to happen. It's a definite thing that you will die, okay? But you want to die, leave behind something that you don't want to put others into burden, okay? So, in my case, for example, if I were to die, right, I know that I have my insurance coverage, I have my insurance EPF contribution, and some other wealth that I have actually accumulated, all right? Not much actually, yeah? But this thing, all right, if you were not there, then who are going to do this? Who's going to manage all these things, all right? And I said earlier that, of course, you want to appoint the administrator. And the second one is how you want to distribute this, okay? Remember that you have your beneficiaries, and sometimes the amount left behind is more than what is needed, for example, right? You may put a portion of the income that you have generated during your life that you want to contribute to, for example, for rumah anak yatim, right, or for masjid. So all this will be part of your punya amal jariah for us Muslim, yeah. For non-Muslim as well, you may want to put into any other NGOs, for example, all right. So this is the thing that you can put into the will. So if anything happen, then your wish can be executed. All right. So, but the problem here is that, all right, in our culture, all right, I'm not sure about non-Muslim, all right. I'm talking about for example, Malay culture, right? It's very difficult for us to talk about leaving behind a will. All right. They say that, why you want me to die so fast? Yeah, something like that. They say that they think that if we ask them to put a will, they say that, okay, you want my wealth so fast. Right? It's not that. Actually, it's more on the administration. We want a person being appointed. right? I just want to share with you my case. For example, I don't have any more parents. All right, my parents passed away a few years ago, long time ago. Okay, but I have my in-laws, for example. Yeah, my parent-in-laws and my father-in-laws. They are here in Batu Pahat. Okay, so but as an in-laws, it's very difficult for me to ask them. They are already 70s, right? 70 plus years old, right? So. And they have few properties, for example, right? So what we need is that we need a person to administer. If anything happened to them, any one of them pass away, all right, they have to, whatever left behind is the estate has to be managed, right? Whether you want to give it to the children or you want to give it to anyone, someone has to manage that. So you need to appoint that person now rather than later. Okay. And remember that if the children, even though you say that, oh, I have my children to handle, remember that the children is not, they don't have time, all right, to go to the relevant officers. For example, the land office, you need to go to the uh, I do not know lah how to, even to dispose a house is not very easy. Yeah, and then you have to change the name, everything. All these things needs a lot of time, and of course you have to pay. So rather than pay later, why not you pay now? Okay, so you appoint a person. So in my case, I have actually, for my case and my husband, we have actually created a wasiat, right? With okay, there are many company, the trustee company, right? So we have, for example, we have salihin trustees, we have wasia, and we will even have lawyers, for example, legal firms that can be a trustee. So you have to, of course, you have to shop around, all right, who are the trustee that you want to appoint, because remember that if you appoint a trustee which is registered under Bank Negara Malaysia or the central bank, all right, so if anything happen, even though, for example, you sign a with that salihin, for example, all right, if anything happened to salihin itself, all right, the company or the trustee, all right, Bank Negara will handle everything, all right. So it's guaranteed under the government. So so the challenges is here is that to get people to leave behind a valid will, yeah, a valid will, because it's a taboo for us actually to talk about all these things. But I always, in my class, I always tell my children, not my children, my students, yeah, try to have a small talk, all right, try to have, it doesn't has to be a formal one, all right, an informal one, talk about, maybe you have to talk to your parents, what's their plan, for example, with regard to the wealth that they have accumulated, right? Remember that we are not trying to see that, okay, I want how much of the wealth, for example. No, that's not the objective. The objective is actually how to manage, right? Who is going to manage the wealth after we have someone come? Give me a minute.
Okay.
Doktor tengah present tu.
Doctor, your microphone is still mute. Is doctor presenting now?
Doctor, I cannot hear you.
Doctor, your microphone is muted.
Oh my God. So when did actually start blah blah blah?
Since you
Start from-
back and open the textbook and the white mind map one.
Oh, so means that you saw the PowerPoint, but you don't see me. You don't listen. You can't hear me. Is
Yes,
it?
yes.
Yes, I thought you were
God.
for PowerPoint.
Hmm. So dah lah benda ni. Okay, present now ya. So I have to repeat everything kah? Recording right?
Yes.
Never mind lah. I'll try again lah. Never mind. We do again ya. 4, 7, 4, 17. Okay, never mind. We have a lot of time. Actually, this is second week, right? So we are supposed to, according to the course outline, we are still supposed to be under estate topic. So we have moved to the new topic already. Okay. So okay, can you see this now? The PDF?
Yes.
Yeah.
Okay. Alright. So what happened is that tadi you tak dengar everything that I say lah ya?
Yes,
Never
including the
mind.
PowerPoint and the
Okay.
mind map.
So okay, never mind. We start again. Okay, trust. All right. Trust is an equity obligation. All right, binding a person who is called a trustee to deal with the property over which he has control. Right. For the benefit of persons, we call it as a beneficiary. So what happened is that, remember in the last class we have the executor, estate of the deceased person. So rather than you transfer this estate to the beneficiaries, all right, you keep the estate. And then you create a trust and you have a trustee to manage the estate. So for example, the trust could have, for example, the estate is made up of properties that generate rental income. It could have shares that generate dividend income, or maybe a fixed deposit, all right, then you have your interest income, or even you have a business income. Right, most likely is a business income lah. Right, so you have a business, rather than you pass everything to the beneficiaries, but in this case you create a trust and the trustee manage the estate. So what happened is that on an annual basis, all right, depending on maybe periodical basis, income from the trust distributed, right? Income, not the trust itself, not the estate, but the income is distributed to the beneficiaries. Income of the trust. So in this case, when you distribute the income from the trust to the beneficiaries, then the beneficiaries receive the income. In that case, there is an income to them. So the income from the trust is taxable on the beneficiaries. You understand that? So now we are looking at two, right? We have we are going to look at the tax, how to compute tax on the trust itself, right? And then the trust will pay tax on the trust income. What happened then? Then you distribute the income from the trust to your beneficiaries, normally on an annual basis, right? So you distribute to the beneficiaries. Now the beneficiary receive income from the trust, then that income is subject to tax. But remember that the same income from the trust that you transfer to the beneficiaries, the income tax has been paid by the trust at 24%. So remember that you have, when you have shares, for example, under normal circumstances, when you have shares in a company, when company pay out dividend, okay, when company pay out dividend, the company actually pay tax on the dividend first to the government. Remember, for example, dividend is 100,000. So the company will have to pay tax 24% on that dividend before they distribute to the to the shareholders. So in this case, tax has been paid on the dividend received by the shareholders. So that's why in your tax computation, whenever you receive dividend from Malaysia under single tier system, all right, you will just put dividend income Malaysia, you put that as a final income. Why? Because you don't bring that into your tax com again. Why? Because tax has been paid at the company level. Anyone not clear about this example? Your dividend income? Are you clear about that? Oh, sudah. You hear me or not?
Yes, doctor.
Nanti you have to respond, okay? Otherwise, I am talking on my own. Okay. So similarly, all right, when you talk about trust, all right, trust will pay tax on the total income of the trust. And then of that same income, you distribute to the beneficiaries. So when you distribute to the beneficiary, actually tax has been paid on the income. All right, but the law requires that on the beneficiary level, you have to assess, you have to assess this, okay? You have to assess this at gross, right? Income assessed at gross at the beneficiary level, okay? So that's why you have to do the computation. So when you assess at gross, it means that, for example, the case is here, if the trust income is 100,000, so trust pay tax 24% on that 100,000. Right, 24% means that 24,000 lah. Okay, but when you distribute to the beneficiary, assuming that there's only one beneficiary, so the trust income has to be distributed to the beneficiary 100%. So in that case, beneficiaries should get 100,000. But actually, what you actually receive is only 76. Why? Because tax has been paid on that 100,000. So the amount balance left is only 76,000. But when you receive the income, even though you actually receive 76,000, but for tax computation on the beneficiary, the income is assessed at gross. It means that we assess the income of the beneficiary at 100,000. Okay? All right. So because you assess at gross, it means that when you do your tax computation, tax liability of the beneficiary will also be on the 100,000. So it means that now, if you do not do adjustment, it means that trust paid 24% on the same income, and now beneficiary also has to pay 24% on that income. So it's not fair because now it's double taxation already. Yeah. So what they do is that because assess beneficiary at gross, then you compute a tax liability. Now you give your tax credit. Okay. You give a tax credit. So what is a tax credit? Anyone? What is a tax credit? Pernah buat tax credit tak?
Pernah.
Yes.
Yes.
Kan? It means you have whatever your tax payable minus section 110 set off. So how much is your tax credit here? If your income assessed gross is 100,000, what will be your tax credit given against your tax liability?
24,000.
24,000.
24,000. Exactly. It means that even though your tax now, the tax liability is at gross income, but now we given you credit of 24,000. So in other words, we do not double tax you. So you only pay the balance. Right? If you have any other income, but if your income is only 100,000 on the trust income, so your tax will be 24%, also assuming that the flat rate lah, right? 24%, that means that now you have a tax rate of 24. So for the beneficiary, your balance of tax liability is 0. You see that? So you have to do the computation for the beneficiary, all right, and to see how much is the tax liability that they have to pay based on the income from the trust. Okay, so before we go into that, okay, let's see that what are the terms that you should be able to understand first before we go through the whole chapter. All right, the trust, okay, I tell you in advance that trust is more challenging as compared to the estate. All right, so please give full attention on this topic, yeah, so that you will be able to do well in this exercise. All right, so trustee is the trust body, is a chargeable person under the Income Tax Act. So that's why once you're a chargeable person, means that you have to pay tax on the income. Beneficiary is whenever beneficiary receive income from the trust, the income is subject to tax because the income is fall under section 4E. It could be an annuity, it could be a periodical payments, yeah, income from the trust. Then you have the terms what we call total income. So you must know how to compute income of the trust from the income from the business until your total income. Right? There's no relief and rebates because trust is not an individual, right? So that's the case you only compute until total income. So whatever your total income, you will times by the 24% tax rate. The other term that you also need to understand is what we call distributable income. All right, the name look like, okay, how much income which is available for the trust to distribute to the beneficiaries. That's what namanya distributable income. So later we look at why there are two different concepts between total income and distributable income. Then you also have the term where we call discretionary trust and non-discretionary trust. So we look into this later. Okay, the trustee could be an individual. All right, you can appoint yourself as a trustee. All right, it could be one individual, it could be many individuals. And then you can also have professional advisors. For example, now we have many trustees company, right, which is actually legislated under the Bank Negara Malaysia. So they are highly regulated. And then we also have a trust company. Yeah, and then the responsibility of the trustees are to settle the deceased personal tax liability if there is any, right? Including, for example, every year the estate or the trust have total income, then you have to pay tax of the trust. Administer the trust and distribute the trust fund to the beneficiaries. And then when is it terminate? Because when the whole money subject to trust has been distributed, right? So then, for example, the trust no longer generate any total income, right? So there's nothing to be distributed to the beneficiary. So in that case, the responsibility normally we will terminate the trust itself. Okay, now you have to look into the resident status of the trust. Why is it so important about resident status of the trust? I do not know. All right, because I don't see the different treatment, tax treatment between a resident and a non-resident trust. But because it's covered under the tax book, right, it mentioned about the resident status of it, maybe for other purpose, but not for tax treatment yet. Yeah, but we know that it said that we can have a resident and non-resident trust. Resident trust when any of the trustee of the trust is resident in that basis here. So any means that you have many trustees, It could be you have maybe 4 individuals who are the trustees of the trust. So any one of them is resident, then the trust is a resident trust. But if all the trustees are non-resident, then the trust is a non-resident trust. Or the trust will also be deemed, right? Deemed is very important term in income tax, all right? Deemed means that even though it's not, but you are, right? Because we consider you there as a non-resident when the trust created outside Malaysia by an individual at that time was not a citizen of Malaysia, and all right, means that you have to fulfill all these conditions, then you become a non-resident. You're deemed to be a non-resident. And the income derived entirely from sources outside Malaysia and administered for the whole period by a person outside Malaysia, and at least half the trustee are non-resident in the relevant basis here. So for a trust to be deemed to be non-resident, all right, most likely, logically, you see that everything is from outside Malaysia. It was created outside Malaysia, income also from outside Malaysia, the trustee also non-resident. So because of that, it's a non-resident trust. So it makes sense. Yeah. Okay. Sources of income, they put it under two. One is ordinary source and further source. But because from YA 2004, I don't know why is it 2003, from 2004, your foreign source is exempted. All right, so you don't have to compute how much is your foreign source or your further source because it's already exempted. So then you just, whenever you have foreign source, then you just put your income is exempted. Okay, trust income, right? So you are only taxed once at the trustee level or at the beneficiary level. So as I mentioned earlier, all right, if I say that trust is taxed at the trustee level, then, all right, the beneficiary will not be taxed again in the form of giving tax credit, right? So it means that we only tax the trust income once, either at the trust level, most of the time, but later you'll see that there are some exceptions where trust is not taxed at trust income is not taxed at the trust level, but the trust income is taxed at the beneficiary level, right? So what happened is that, for example, just now trust income have 100,000, so you apply to Inland Revenue Board not to pay tax at the trust level. What you do is that whatever 100,000 that you have, you give to your beneficiary 100,000, and then later beneficiary will pay to the Inland Revenue Board whatever tax on the income. So in this case, there will be no tax credit given because why? Tax has not been taxed. What? Income has not been taxed on the trust income. Yeah, tax has not been charged on the trust income. So that's why now you tax on the beneficiary. So that one we also going to look that topic later further on that, yeah. Okay, when talk about trust income, all right, as mentioned earlier, it's similar. You can have income from your section 4A, business income. You can have income from 4C, 4D, 4C, 4D lah normally, yeah. 4A, 4C, and 4D. So whenever you have 4A, means that any income incurred against the source, all right, any expenses incurred against the source is deductible, provided that it fulfills section 33 lah. All right, expenses incurred wholly exclusively in the production of the income is deductible in arriving to the adjusted income of the source. For example, you can have adjusted income from your business, adjusted income from your rental. Yeah, so similar. However, the cost of administration cost of the trust is a non-deductible expense, right? So remember that the administration cost is not cost incurred to produce income, right? The cost incurred is to manage the trust, not to produce income from each source. That's why it's non-deductible. Similar to executive fee lah. Last time, yeah, executive remuneration is non-deductible because income is not in the production. Because the expense incurred is not in the production of the income. Yeah, so whenever you have trustee fees, it's non-deductible unless it's clearly mentioned that the trustee involved directly in managing the business of the trustee. right? So that one is, hopefully it's clear, right? Rate at 24%, I mean that now, until now, 2020 also still 24%, and foreign source is exempted. Okay. To the beneficiary, all right, beneficiary is a person who receive benefit, that's what namanya beneficiary, right? You receive benefit under a will, if there is a will. If there is no a will, of course, you are still a beneficiary, but the process is longer. It takes longer to ensure that, okay, you are the right beneficiary. Yeah. And then whatever income received the beneficiary is taxable under section 4E. So it's just that the mechanism is that tax actually is the charge on the beneficiary. But the difference is that you want the tax charge at the trust level, or you want tax to be you want the income to be taxed at the beneficiary level. All right. So later we'll see how is it different and which one is better to the beneficiary. Either to be taxed at the trust level, or you want it to be taxed at the beneficiary level. Any guess for that? Which one is better for the beneficiary?
Trust.
The first one, trust level. Why?
Not sure. Just guess one of it.
All right. Remember just now, if I say that, remember I'm talking from the beneficiary perspective. If the tax is charged at the trust level, assuming income is 100,000, tax 24%, how much received by the beneficiary? The balance?
100,000.
You receive 100,000 ka?
76,000.
76 only, because why? Tax has been paid on the 100,000. So the amount left is only 76,000. It's just that for income tax purpose, assessed at gross. So you're going to be assessed at 100,000 even though you actually receive 76,000. But later you are given tax credit. Okay? But the other way around, if you don't pay tax at the trust level, so trust 100,000, don't pay tax. Right? You distribute everything to the beneficiary. So how much beneficiary receive? 100,000. Yeah. So if you are the beneficiary, you want to receive 76 or 100?
76.
You want,
76.
you want to receive 76?
100. No liability.
Aku ambil 76 tu. Mana-mana? If you are given, I give you a choice. You want 100,000 ke you want 76,000?
100,000.
You want 100,000?
Liability.
You would 100,000 now, and I pay tax later. I pay tax bila? Katalah now is 2020. Yesterday I received 100,000 from the trust. When will I pay tax on that 100,000?
The end of the basis.
Sorry?
The
When will
end
I
of the
pay tax?
basis.
When I submit my tax return today or next year? When do I submit my tax return? Next year. And it could be in June next year. So remember, for tax planning, it's always that when talk about tax, you either, if possible, you want to eliminate the tax. If you cannot eliminate, means that you want to zeroize your tax. If cannot, at least you want to minimize your tax. If you cannot minimize your tax, all right, or you can minimize your tax, you want to go further. You want to defer paying your tax. You don't want to pay tax now. If possible, pay next year. I pay next year. All right, so that is a tax planning. Your objective is always like that, to zeroize, minimize, and defer. Okay, so whenever given an option to defer paying tax, you want to take that opportunity. You want to defer paying tax rather than pay now. I want to pay next year. So in the case of trustee, all right, if given a choice, all right, you want to apply the section that allows tax be paid at the beneficiary level. Why? It gives you a lot more cash flow. So rather than I receive today 76,000, I should receive 100,000 today. and I will think about the tax later. Right, next year. Okay, then what else? Okay, in terms of the distribution to the beneficiaries, right, from the trust, it could be general distribution or specific. So specific means that in the will, it specifically mentioned how much each beneficiary will receive their amount. All right, and it could be in the form of annuity. All right, so most likely, normally in the question, annuity is received by the wife. And then we also have residuary beneficiary. So as the name says that, okay, residuary beneficiary means that whatever left, okay, that's your part. Okay, you only take the residue, the balance of the distribution, whatever amount left. Okay. All right, in terms of tax treatment, as I mentioned earlier, for the beneficiary, if you are taxed at the trust level, right, means that tax at trust level, what you actually receive is 76,000, but you will be assessed at gross. So I will assess you at 100,000, but I give you section 110 set off against your tax liability. All right, but later we'll see that you can actually apply section 61(2) proviso, whereby it says that rather than pay at the tax level, now you apply to Inland Revenue Board so that the tax be charged, the tax be charged at the beneficiary level. So in this case, whatever amount that you receive, in this case is the gross amount, all right, will be computed, but there will be no section 110 set off credit, right? But then tax is paid by the beneficiary, right? And in this case, why you want to apply 61(2)? Because you will receive more cash flow. But again, 61(2), you have to apply to the Inland Revenue Board, and the approval is on case by case basis. So far so good? So next is the distributable income. All right. What do we have here? Accounting concept, cash. Okay. All right, distributable income. I think that this one, I will give you a video on this topic later, yeah? Because I have actually described this topic in very detail. Okay, types of trust. Okay, so when look now, you don't get confused. Okay, now you look into here, for example. So bila you cakap pasal trust, you are going to looking at trust, whether the trust itself is a dia macam mengajuk macam tu. Whether the trust is a discretionary trust or non-discretionary trust. Yeah, non-discretionary trust is a fixed trust. Discretion tu maknanya based on your discretion, right? Katalah I nak bagi you marks 10% based on my discretion. If I like Wong, I will give Wong 10%. Budi bicara. Yeah, budi bicara, my husband cakap. Yeah, discretionary. So it's based on my discretion, then I will decide. But it says non-discretionary, means that I cannot decide. The trustee have no power to decide how much to be distributed to the beneficiary. All right, so why? Because under the will, the name of the beneficiaries has been clearly mentioned and in a defined shares. Yeah, so that one is based on the will. But if it's a discretionary trust, it means that the trustee will decide, have the power to decide on the amount of trust income to be distributed to the beneficiary. But it says here that discretionary trust provides greater flexibility in terms of the tax planning. Right? Again, it depends, right? Because it depends on the situation. Maybe the trustee may have a better knowledge on how to distribute the income fairly, or fair. Right? It's very subjective to the beneficiaries, right? And then, okay, we have another one, what we call unit trust, yeah? So unit trust is a different, right? It's a different trust as we are saying here. Unit trust is whereby it's an enterprise which distributes proceeds only to those who subscribe to the trust in defined shares. So if you go along, for example, if you were to go to any shopping mall, for example, You can see some people actually invite you to join a unit trust. For example, those from public mutual, both anyone from CWA, for example, the principal, right? So what they want is that they want you to subscribe, means that they want you to buy units of trust. So when you buy units of trust, so you put your money into the enterprise, right? For example, you say public mutual, right? You put your money into the public mutual, so now you have units in the trust. So it's not called a shares, it's called units, right? So you are unit holders. So rather than being a shareholders, you are the unit holders. So what happens is that the public mutual will get all the money from the unit holders and invest the money into somewhere else, and income from the investment will be later distributed to the unit holders in the form of shares, in the form of dividend. Sorry, sometimes they panggil dividend, and then ada apa unit distribution, you ada split the units, everything lah. Alright, it works like shares, but they call it as a unit. So this unit trust is another topic, alright, under income, because the tax treatment of the unit trust is different as compared to the trust that we are talking now. Alright, the trust that we are actually covering here is the estate of a person, right? You don't actually invest the estate. So actually you manage the estate, generate the income, the existing income. Okay, right. So then we have a beneficiary. So what happened here is that if I were to, I know that some of you dah macam lost, right? So if I were to say here like this, okay, kalau trust, oh please work. Okay, what are the type of trust?
Fixed trust, stationary, unit trust.
Kita panggil fed up. Hold on ya. Tak boleh pakai lah. Okay. Now bila you tengok trust, you have the types of trust, then you have the non-discretionary or you have the discretionary trust. But sometimes you also have the mixed trust. Mixed trust tu maknanya in the will, I didn't mention how much is to be received by certain individuals, certain beneficiary, and the other beneficiaries is up to the trustee to decide. So in this case, under the will, it could be mixed discretionary and non-discretionary trust. Yeah. But then if you look into the beneficiary itself, the beneficiary, then you see that whether what they have is the types of the income that receive. Berapa kat sini? Right. So then you have to see if the income is, how are you going to assess income, right? Based on non-discretionary or discretionary trust. Because how much you decide on the statutory income of the beneficiary depends on whether the trust is a non-discretionary trust or the trust is a discretionary trust. Because the income depends on the type of trust, right? For example, I say that the beneficiary, if it's a full discretionary means that it's a discretion by the trustee, right? So in this case, it's a discretionary trust. If there is one beneficiary, okay, you're looking at, if there is one beneficiary, you have to look at how much you actually receive. Yeah, how much is the total sum received in Malaysia, and then you compare that with the trust total income. So for example here, you're going to say that how much you receive may not be the same as your total income. Why? Because the concept of distributable income, right? So later you look into that. So you'll see that later, whichever is lower, that will be the income of the beneficiary, right? So let's look at the example here. It says that 0.6. Let me check. Okay. In terms of the computation of the trust, right? Tadi kita tengok beneficiary ya. Okay, tengok beneficiary dulu. Right, beneficiary. Is it this one? I think that is 10.6. Ini nak kira trust ni. Let me check if that. Oh, kenapa terbalik pula ni? Anis. Alamak, terbalik pula. Macam mana nak buat terbalik ni? Rotate clockwise. Rotate clockwise. Rotate clockwise. Okay, right. Let's see this example. Oh my god, don't tell me. Don't tell me. Okay. Okay, let's see this one, yeah. Okay, 10.6. Dragon Ball Trust is a resident for 2020. Aini is the beneficiary. So there's only one beneficiary, and the trust of the trust and the distribution of income is based on trustee's sole discretion. So it's a sole discretion means that it's based on the discretionary trust. Yeah, the total income of the trust is 20,000. But in 2020, Aini received 28,000 from the trust, right? However, it will be the lower amount received, which is 20,000. So in this case, we say that it's a full discretionary. There's only one single beneficiary. So in this case, you're going to compare between the amount received and the total income of the trust. So total income of the trust is, how much is it? Wow, what happened?
20,000.
Ni 20,000 kan? But what you actually receive is 28,000. So because of that, right, you're going to take the lower, whichever is lower would be the statutory income of the beneficiary. So in this case, all right, if you are the beneficiary, you want it to be taxed on the 20,000 or you want to be taxed on the 28,000?
20,000.
Of course, you want to pay on the 20,000. Why? Because that is the lower. So you only pay lower tax, right? So why do we have this provision? If there is a single beneficiary, then we take the lower off, yeah? So why? Because to make sure that the beneficiary is not manipulated by the trustee, right? So if you don't have the lower off, maybe the trust income 20, in this case, whatever that you use 28,000, then we tax you on the 28,000. But in order to protect, right? But in this case, it's okay lah because they receive more than what is total income. But what say that total income 20,000, you only actually receive 10,000, right? But if you don't have that provision, you will be taxed on the total income 20,000. But because it's a discretionary trust, then we say that whichever is lower. So even the trust of the income 20,000, you only receive 10,000, then we tax you on the 10,000. Can you see the benefit of it, right? In order to protect the beneficiaries in the sense of whenever you have the full discretionary. Okay. Yes.
How can the trust total income is 20,000 but I only receive 28,000?
Okay. So for that, alright, I can only answer that bila I jawab issue on distributable income. Right? Nak kita jawab terus ni. Okay. Kat mana Sekejap ya. Kat mana nak tengok ni? Tak jumpa dah pula. Sekejap. Banyak benar. Bahaya. Okay, and later I come into this distributed income, yeah? Because you'll see later, in order for you to compute total income, right, is based on total income of the trust. Oh God. Kalau I pusing ni akan dapat apa ni? Alamak, macam mana nak buat ni? Kenapa anak I tak buat betul-betul? Kalau I pusing, rotate clockwise. Clockwise dia jadi pusing kat situ Okay, right? So you look at here, yeah. Whenever you want to compute the income of the trust, you have to follow the Income Tax Act, right? So you will have your business income, you have your statutory income, interest, rental income, all these things. Yeah, so this is according to the income tax. But remember that whatever you pay tax, the total income here is not necessarily the same as how much cash you have in your trust. Why? For example, when you compute your statutory income, right, you have your capital allowance, simple capital allowance, right? But for example, you have capital allowance of 10,000. Do you actually pay 10,000 for your capital allowance? No, right? Because capital allowance is just a concept under Income Tax Act. You don't pay 10,000 for your capital allowance. So in that case, you don't have your cash is still there, right? But for example, you're talking about business dividend income. All right, under section 4C, for example, if you have a dividend income from Malaysia, you will say that, okay, my dividend income under Taxcom, my dividend will be final, even though I actually receive 50,000 from the dividend. Yeah, so that 50,000 is my cash available from the trust. Yeah, but under the Taxcom, all right, my dividend is exempted or final. Similarly, for any expenses that you pay, right? If you pay, then it's allowable. But if you pay expenses for your renovation, you cannot deduct that expenses in arriving to your total income because that expense is a capital in nature. But do you have to pay for the expenses? Yes. Even though it's non-deductible, but for cash flow purpose, you have to pay your renovation expenses. Do you have that? For example, your renovation is 15,000. You have that 15,000 now? You don't, because you have to pay that to the contractor. So that makes a difference between total income, which is actually based on your Income Tax Act requirement, and your distributive income, which is actually based on the cash flow, or we say basic cash basis, right? Your distributive income, that's why your total income may not be may be the same as your distributable income. Because why? Because the computation is based on, one is on the Income Tax Act, the other one based on the cash basis. Yeah, so whether income, whether you have the cash, you receive the cash, or you have to pay for the cash, right? For example, even here, for example, if you have losses, right, even though you can minus your current year loss, but under distributive income, you don't have that loss. Yeah, because you don't have to pay, you don't pay for the losses. It's just a concept, right? So that's why later you'll see that your trust income could be lower than your distributable income, right? Macam dah okay je pula. Oh, okay. All right. The example now I want to look at is, alamak, I kena pusing balik ni. Rotate. Macam mana buat ni? Rotate. Okay, where are we? All right, example 10.7. In the event I need receive 16,000 from the trust, all right, and then it says that the trust total income 20 and you only receive 16, then the statutory income will be the lower, which is 16,000. Although the trust paid an income tax payable 24% on 20,000, amounting to 4,008, INI can only get 3,840 as a set off against her income tax payable, being tax suffered by trust on her share of income. So in this case, the tax credit is actually because we assess on the lower 16,000, so the tax credit is actually on the 16,000, not on that 20,000. Yeah, so the tax credit based on how much is assessed on you lah. But in this case, assessed on the lower, so tax credit is also on that amount 16,000. All right, what if you have several beneficiaries under full discretionary? So logically, all right, logically, if you have, for example, two beneficiaries or 3 beneficiaries or 4 beneficiaries, all right, you're going to apportion lah, all right, whatever the income. It says that where there are several beneficiaries, the aggregate of all sum received by the beneficiary in Malaysia exceed the total income of the trust body, then same income of the beneficiary is derived as follows. So you have to apportion for each beneficiary the sum received over aggregate sum. Yeah, sum received by each beneficiary over total received by all the beneficiaries. So example here, what is this? 10.8. Mei Ying received from the trust body 10,000. All beneficiaries receive from the trust body 40,000 and the trust total income is 20,000. Alright. So it says that whenever, alright, it says that kat sini. Mana? Pen mula tak ada. Okay. When the aggregate of sum received exceed total income. Right? So what is the amount received? Total received is 40,000. But your total income is only 20,000. Right? So it means that you're going to apportion that 20,000 times by 10,000 received by Mei Ying over 40,000 total received. So in this case, even though Mei Ying actually received 10,000 from the trust body, right? The amount that is statutory income that will be taxed on the Mei Ying is only 5,000. Why? Because you apportion this. Because you have to apply the formula. Right, you apply because out of 40,000, Mei Ying get 10,000 and that you apportion against 20,000 total income of the trust. So that's why we tax you only 5,000 ringgit. Okay, that is a discretionary. But non-discretionary trust, it means that the trust did spell out the ratio or the entitlement of each beneficiary. Such trust is said as to be non-discretionary. Right, so whenever you have non-discretionary, the beneficiary would be assessed to tax based on their entitlement, irrespective of whether they actually receive such amount from the trust. So bila you ada non-discretionary, you tak ada compare whichever lower, no. Whatever is your total income, then times by whatever is your entitlement, whether you receive the same amount or not, doesn't matter. I will tax you on whatever that you actually receive. Right? Okay. Brother Aaron, Kevin and Chu. Tiba-tiba tu ingat apa? Cerita Crazy Rich Asian lah. Are equal beneficiary under a trust created by the will of their grandfather Wahsan, who died in Malaysia in 1984. The trust properties consist of landed property and shares. Under the term of the trust, the right of the beneficiaries are as follows. Okay, can you see that? Age 21, until age 21, each brother's share income is to be accumulated within the trust. So it means that until while they have not reached 21 years old, they will not get anything. Whatever their portion, whatever their entitlement will be accumulated in the trust. Right? It means that from age 21, then the income is to be paid out to them. And the trustee are empowered to make distribution of shares for not more than 1,000 shares to any of the brothers before they reach age 21. All the brothers are the beneficiary of a non-discretionary from the age of 21 and their entitlement, which is 1/3, all right, because it say that mana cakap 1/3 sebab it say that to be paid out to them. Shares, brother share of income is to be accumulated. Ada sebut are equal beneficiary. Nampak ni? Are equal beneficiary. So it means that they will have ada 3 brothers. So each one will get 1/3 each lah. Yeah. It's clearly spelled out in the trust deed. Before the age of 21, they are beneficiary of accumulation trust. Lump sum received from accumulated income would not be taxed in the hand of the beneficiary. So remember that. So if the trust says that the amount is to be accumulated, so for example, from year 10 years old until 21 years old, maybe 1 million accumulated. So when reach 21 million, whatever accumulated will be paid to the beneficiaries. So when amount paid from accumulation, so this is what we call a capital distribution. Right? So whatever accumulated paid, no tax on the accumulation. So whatever you receive 1 million, you won't be taxed on that amount. But after 21 years old, then you're going to be given 1/3 of the trust income. So the 1/3 of the trust income that you receive annually after the age of 21, that is taxable on the beneficiary. Okay. In no situation the trust can be a discretionary trust because it's very clear mentioned. Yeah, in this example, the trustee merely have the discretion power to distribute the asset, which is the capital accumulation, not income, trustee discretion as to the trust capital does not tantamount to a discretionary trust. Okay. Okay. Now we come to the concept of distributable income. Right? As I mentioned earlier, distributable income is based on the accounting concept. Right? Accounting concept, which is derived by deducting all income against all expenses, is the amount of cash available to the trust for distribution. The total income of the trust body, on the other hand, is determined strictly in accordance with the Act. It's always differ from your total income. Where there exists more than one beneficiary, the distributed income is used as a ratio to allocate a portion the trust total income to respective beneficiaries. Right? Okay. So now you have discretionary and non-discretionary part lah. Okay, let's see example here. Because if I were to read everything, then everybody get more confused. So let's look at the example here. A trust was created in 2005 and total income was 150,000. 1/3 was related to the discretionary portion, which is Liang Hui. Okay, Liang Hui, 1/3. Okay, so when you go through the question, alright, you may want to take a note lah. Okay, Liang Hui, 1/3. Oh, besar sangat lah tulisan ni. Tapi bau tu point dia pun. Okay, and then you have Hok Chi, balance, balance of the trust total income. Liang Hui 1/3. Okay. Liang Hui received 40,000. So you have to compare, right? Whenever you do that, then you may want to see. Dia dah jadi ni kuih lah. Mana punya trust tadi? Okay. So now we talk about the beneficiaries. Okay, when you have your beneficiaries, right, you have to look at whether is it a non-discretionary or is it a discretionary. Okay, so if it's a discretionary, then you have to further see whether amount received, and you have to compare that with the how much is the total income, because you want to see how much is the statutory
Doktor kat mana?
Start.
I ingat laptop saya hang tadi. No, 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 not laptop hang. Risotto, don't worry. Semua tengok Damia gerak saja.
Doctor, I'm mute.
Okay, right? So it's still recording. Oh, penat ah. Mana tadi ah? Alright. So Xiao Yi, alright, the deemed total income is 11,000. Amount received 20,000 is a discretionary portion. What is the statutory income? How much is the SI for Xiao Yi? Anyone? You compare 11,000 and 20,000. Which one is lower?
11,000.
11.
Because it's a discretionary portion, then you take the lower as your statutory income. But in the case of non-discretionary, the deemed total income is 22,000. Even though she actually received how much? 20, siapa ni? Cheng Hui eh? Cheng Hui actually received 33,000. Which amount that you should bring to tax? For Cheng Hui. What is the statutory income of Cheng Hui?
The 22,000.
22,000. Why? You compare 22,000 and 33,000. Why you decide that the statutory income of Cheng Hui is 22,000?
Lower.
Huh? Lower?
Yes.
Okay. What is the type of a trust for Cheng Hui? Discretionary or non-discretionary?
Non.
Non.
So how you decide SI for non-discretionary? Sudah.
Higher.
Whichever is higher, ya Allah. Mana tadi ya? Kat mana Not here. Explaining. Sudah terbalik dah. Tak nak tengok. So kalau non-discretionary, right, you have to take whatever is the total income. You don't have to compare whichever is lower. You compare whichever lower if it's a discretionary portion. Right? Kalau non-discretionary is always to be the total income. In this case is the deemed total income, 22,000 to be taxed on the beneficiary. Okay, so ini memang totally out lah ni. Close all that. Sebelumnya, I try to reopen. What is this? No. Nak accept everything. Okay, so bila beneficiary, if it's a, you have to see whether the beneficiary is a discretionary or non-discretionary, right? ND, if it's ND, then you have to decide what is ND means that the statutory income is SI equals to total income. Okay, but if it's another one, if it's a non-discretionary trust, discretionary trust, discretionary trust, so SI equals to whichever is lower, which is between total income versus amount received. Okay, you get that? Okay, Kalau beneficiary, if it's a non-discretionary, the statutory income is the total income, or sometimes you can also have the deemed total income. But in the case of discretionary trust, the statutory income of the beneficiary is the whichever lower. You compare your total income against amount received. Right? So Cheng Hui, okay, that one. Siu Hong, alright, the other son, Siu Hong, alright, because the amount is accumulated. So as long as the amount accumulated, there's no tax on the beneficiary. But upon withdrawal of the accumulation amount, alright, that will also be not taxed on the beneficiary. Dia kira macam capital distribution lah, alright, because they one off distribution of the accumulation money. The trust annuities is, what's this trust annuities? Where a resident trust is obliged to pay annuity, the amount payable shall be deducted from aggregate income. So it's normal lah, bila you ada annuity, you minus against your aggregate income. So if you don't have any aggregate income minus current year loss minus annuity payable. So the amount, the formula is similar to the executor, right? The estate that we done before. The annuity payable is deemed to be derived and trust is not, in case of non-resident trust, okay. Ni apa pula ni? Saya ni nak tengok ni. Rotate. Rotate. Okay. Okay, let's look at it here. Alright, are you ready? A trust body has a total income of 40,000 for YA 2020. They are beneficiary Ite and Ayam. Ite is a resident entitled to 3/4 of the distributable income, and Ayam, a non-resident, entitled to 1/4 of the distributable income. For the basis year, distributable income is 20,000. Both the beneficiaries are single and do not have any other income. What is the income of the trust body? So trust body income, you just based on the 40,000 times by 24%, so that you have your tax liability. Right? And Ite and Ayam, alright, so in this case, Ite 3/4, Ayam 1/4. Remember that statutory income is based on 40,000 here. Okay, it's based on your 40,000 kat sini. So you're going to divide 3/4 and 1/4. Okay, 1/4 to Ite, 3/4 Ite, Ayam 1/4. And then because you are required to compute the tax liability, right? So bila liability maknanya kan pay to take into account relief, because he's a resident entitled for 9,000, but Ayam is a non-resident, then there's no relief. Chargeable income is 21,000, Ayam 10,000, right? Income tax payable, again 21,000 based on a scale rate, you should get 180. Because why you give rebate of 180 here?
Income less than 35,000.
Yeah, chargeable income is less than 35,000. That's why there's a rebate of 180. This one is an individual, yeah. Walaupun dia Ite, he's an individual. Alright, section 110 set off. Why you give section 110 set off?
Tax credit.
Tax credit because tax has been paid at the trust level. So that's why the Ite assessed at gross, but we give you tax credit, which is 3/4 of the tax liability here. Okay, so 3/4 of that is 7,200. So in this case, Ite, all right, because the income from the trust, now he received a refund of 7,200. Yeah. So you receive income refund, tax refund of 7,200. Why? Because tax has actually been paid at the trust level. In the case of Ayam, he's a non-resident, right? And then amount is smaller, 10,000 chargeable income. But because a non-resident, tax rate is at 30%, 2020, YA 2020, tax rate highest is 30%. So for 30%, tax rate is 3,000. There's no rebate because non-resident. But how much is the tax paid? Tax credit is only 2,400. So you have to pay 600 ringgit to the Inland Revenue Board. Yeah. So in this case, even though, alright, Ite received a lot more, 40,000, tapi sebab dia resident, dia dapat tax refund. Yeah. Of course, in this case, because dia punya tax rate sikit lah, because pakai scale rate. Yeah, scale rate. You look at here, 21,000 scale rate, you dapat tax payable is only 180. This one, flat rate, even the income is 10,000, you have to pay 3,000 tax liability. Yeah, so that's why it makes a difference. In this case, Itik will get a refund, but Ayam has to pay additional tax of 600. A person who do not understand the tax computation, alright, Ayam Itik ni boleh bergaduh. Alright, they can argue. I got only 10,000, you got 30,000, but on top of that, you receive additional tax refund from the Inland Revenue Board. I only received 10,000, but I have to pay tax of 600. You get me? Right? Okay. Apa ni? Malah nak pusing boleh? Aduh. Ya, kat sana dulu pula. Okay, this is another example under the trust. Aduh. But I do not want to go through. Okay. Nelson Tan carries on the trading of Daikin. Alright, you are there. Then suffered heart attack, passed away, leaving the wife Liang and 3 children. You set up a trust managed by Liang. She would be paid annuity and trustee remuneration. And then you specifically said that distribute 1/4 to Liang, half to first child, second child as the trustee deemed fit. So remember that here, all right, you have the second child will be a discretionary trust. Liang and first child will be a non-discretionary, and third child is an accumulation. Nelson Dakin set up trust was set up in 2020, and then you have net profit after deducting trustee remuneration, capital allowance. And then the second child received 80,000 from the trust, applied to, and then you have to apply 61(2). What is section 61(2)? Liang applied to RB to allow distribution to beneficiary as a deduction in the trust computation. It means that rather than tax be paid at the trust level, tax will be paid at the beneficiary level. So there will be no tax credit. So the question asks for trust statutory income and total income. Compute total income of the beneficiary for YA 2020. So later you look into this example and see how that applies to your punya understanding. Alright, so this one the most comprehensive example lah, because this one is the last chapter, the last page, the last example for chapter trust. Okay, so by right we have finished our trust, but I do have some videos from the previous semester. Later I'll share with you lah. We got the further explanation on the. So later you can have a look at the video on distributable income. Yeah, on that. Okay, question. It's been 1.5 hours.
There is one.
Yes.
Regarding your advice, which is better, discretionary or non-discretionary trust?
Non-discretionary, from the perspective of
tax planning.
Tax planning for the beneficiary, of course, I will go for the non-discretionary because I will be taxed on the lower of. Isn't it? Why? Yeah. So from a perspective of beneficiary, I would prefer it to be on a discretionary trust because income that is subject to tax is based on the lower of total income and the amount that I actually received. Yeah, so will be taxed on the lower of. However, if the trustees are a trustee, of course namanya trustee kan, mesti trustworthy, right? So if they give the amount fairly to the beneficiaries, then it's okay, because normally when we say it's discretionary, means that the trustee decide who should get more, who should get less, depending on the needs as well. Yeah. So in that case, discretionary is better. But if you're afraid that the distribution will not be fair by the trustee, then that's why they put it very clearly in the form of non-discretionary trust. Okay, so yeah, so again, it's up to you lah. It depends also the trustee, because that's why I say that discretionary trustee more flexible, right, for the purpose of tax planning. So if you think that your trustee will do their job well, all right, of course, discretionary trust is better for the beneficiaries. Other than that,
Doctor, I
yes.
have a question
Yes.
about the previous example, the 10.13 day one.
10.13. Okay.
And may I know the total income is after deduction of income tax payable?
Total income is
of
based
trust.
on, in this case, total income is 40,000.
Oh,
Because it was given trust total income here, dia dah bagi 40,000 kat atas. So you just take that as total income lah. So you don't have to compute.
So I have the question about this, because we can see that the income tax payable is paid by the trust, right? So why the statutory income for the ETEC and Mayan still the 30,001?
Sebab whether it's paid at the trust level or paid at the beneficiary level, the statutory income of the beneficiary will always at gross. Right? You assess at gross, but then you give tax credit at the bottom.
So in here I have because we say that the tax payable is paid by trust, but why we at the back we need to set off the income tax payable?
So because that's the mechanism. That's the mechanism. In order for you to determine the statutory income, the income from the trust must always assess at gross. Right? Whether you receive 30,000 or you receive less than that, assess always at gross. The difference is that if you assess at trust level tax, means that tax has been paid, right? So, but what you get actually, you may get less than that. So that's why we assess at gross 30,000 in case of intake, but we give you tax credit. The tax credit 7,200 ni, kalau you make 9,600 ni, 3/4 is 7,200. So we actually give back. We do not tax you twice, right? We tax only at the trust level. So we assess you at gross, but we give you tax credit. So it's fair actually. There's no double taxation here. And why you have to do it in such a way? Because the law says so. Which law? Income Tax Act.
Oh, okay, Doctor.
Yeah? All right.
Yeah.
Hello, Doctor. I have a question.
Yes.
How do we differentiate between an executor and a trustee? Is it that one is better than the another?
Sorry, okay. Executor, all right. The question, of course, is clearly say that, okay, the estate or the executor lah, right, in terms of the question. But how you differentiate in practice is that executor, all right, whenever at the end of the day, all right, they will distribute everything to the beneficiary. So there's nothing more left. But if they do not distribute everything, all right, the executor may then pass to the trust, because they will create a trust for the estate of the estate of the deceased person, right? They create a trust, now it comes under trustee lah. So then you compute tax under the trust. Because the mechanism, or executor, they distribute everything, distribute everything to the beneficiary. So there's no more estate of the deceased person. But if trust, they tak distribute the estate. They still manage the estate. What distribute is the income from the estate. You see the difference? So katalah ada satu property je lah, alright? The estate is one property. So if executor, if dia distribute to beneficiary, then the beneficiary akan dapat property tu. And on the beneficiary, the property that received is not taxable on him. Why? Because it's a capital distribution. But what if instead of you transfer the property to the beneficiary, you create a trust to manage this property, right? Assuming that this property is a shopping mall, right? Namanya one property, tapi it's a shopping mall, right? So in that case, you will continue to generate income from the property. So whatever income that generated by the trust, then you have to compute the total income of the trust, then you have to pay tax on the total income. So what you distribute to the beneficiary is the income, right, from the trust. You do not give property to the beneficiary, but you give income from the property to the beneficiary. You see the difference?
So who holds the title of the property after the person, the original owner of the property has passed away? So is it under the trust? It's under the trust.
Trustee. It's under the trustee.
Oh, okay.
Yeah. You may because when you create a trust, all right, you have to list down all the properties, all the assets of the estate, right, under the trust. What are the estate that is being managed by the trust? Right, that one you have the trust documents, right? Trust agreement. I do not know what it is, but it will listed out everything. So it's still under the trust. You cannot distribute that to the beneficiaries. You distribute only income of the trust to the beneficiaries.
Is it same like the real estate investment trust? Is it the same concept?
Real estate investment? No, it's not the same. Real estate investment trust. You are referring to REITs, is it?
Yeah, REIT. Yeah.
REITs, REITs macam ni. You have extra money, you put into REITs. So REITs actually is a company that manage the trust, unit trust lah, right? Unit trust. So you put money, you dapat unit trust. So they use the money to invest in the property. So gain from the investment, right? They give back to you in the form of dividend. So what you get is not trust income. What you get is the dividend from the unit trust. So that's why unit trust tak sama dengan trust. Okay?
Okay, understand.
Sebab
Yeah.
REITs, bila you cakap pasal REITs, right, katalah you nak buat tax computation for REITs company, alright, so we're talking about REITs, we're talking about the fund manager. Okay, so the computation is not like this. Dia pakai computation under REITs. It's a special tax com lah untuk dia. But most likely REITs kan, dia punya income, because just now I just attended the class, income of REITs, right, if you distribute balik whatever your income, distribute back to the holders 90% of it, so then the REIT don't have to pay tax. It's exempted, provided that 90% of the income distributed back to the bondholder or unit holders. So that is another topic. All right, you can actually look into this topic later when we do specialized industry. Any more? Tak ada? Right? So I want you to go back and read this chapter again. Later, I will share with you the tutorial. So before we do tutorial question, I want you to do the example in the textbook so that you get familiar with the computation of the trust. Yeah. So you do the example, a lot of example in the textbook. So get used to the example given, because the example given is based on the topic discussed. right? So you get know each example first, then only we look into the tutorial question. I will share with you the tutorial question after this, right? But before that, please read the textbook, all right? And please do all the example in the textbook, and hopefully if you have any question regard to example in the textbook, you can always ask me in the next class or next class Sunday, okay, right? So you have enough time lah, and then at the same time I will give you the tutorial question. Maybe you can start doing the tutorial question. Okay. So if you don't have any other things, right? I think that's all for today. Right? It's too much already. It's very heavy, right? Is it heavy or you rasa okay je?
Heavy.
Kinda heavy.
Heavy.
Okay lah. Okay, I would say that for advanced stats, this is one of the heaviest topic lah. Lepas tu dah tak ada dah. Lepas tu dah okay je. Agaknya. Yeah. Trust is one of the challenging topic lah. Yeah. Alright. Oh, we have another one, investment holding pun okay juga. Boleh tahan juga topik investment holding company. Tapi tak apa, it's okay. Next. One thing at a time. Yeah, relax. So make sure that you understand this topic very well, plus your estate topic. Alright. So I think that's all for today. Hopefully in next class we can discuss the tutorial question. Yeah, within that 1 hour. I wouldn't do all the question. I may choose only one question. Right. So please attempt the question first. Then we discuss on the next class on Sunday accordingly. Alright. So I think that's all for today. Thank you for your attention. Thank you for your participation. I hope to see you again. And please, please, please review the topic as soon as possible so that you still have a fresh mind on this discussion. With that, thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
And don't forget your attendance, yeah?
Yes.
I'll see whether I close the attendance or not. Okay, with that, mana tak boleh nak tutup ni, tak jumpa nak tutup kat mana. Stop sharing. Dia tak nak keluar. Okay, bye. Hilang balik dah.
Thank you, Doctor.